What's going on, everybody? Today on the podcast, it is stock trade and investment time, my man O. So make sure you tune in today. It's going to be a lot of good information. I'm pretty sure the info that he's got today, you're going to want to get that. Frame of Mind Inc. podcast starts right now. Get your mind right. Get your mind right. It's a frame of mind. Ladies and gentlemen, welcome to the Frame of Mind Inc. podcast. It's your boy Simbawa Nibai Jr., aka TK, and back from vacation, my man Omar Williams. We call him O. Say what's up to the peeps, my man.
What's going on, good people? Nice to see y'all again.
Yes, sir. It is another great, lovely Wednesday, and y'all know how we do. We jump right in and get things started. Before we do that, it's going to be Affirmation Wednesday. Y'all know how we do. And of course, it could be affirmation any day, but we do it on Wednesdays. And so if you guys are ready to get this in and out the way, you can grab your pen, paper, pad, tablet, whatever you do for affirmations. And let's get these done and get this show on the road. Are you ready? Let's do it. Today will be a good day. Today will be a great day. Today will be an awesome day. Today will be a phenomenal day. Today will be an amazing day. Today will be stress-free. Today will be a stress-less day. Today, I will overcome all barriers that want to block my progress. Today, all circumstances, issues, and situations will work in my favor. Today, I'll become better than who and what I was yesterday. I am a go-getter. I am victorious. I am triumphant. I am an overcomer. I either win or I learn because I never lose. I take authority over this day. I will dominate this day. I will conquer this day. And everything I have spoken into this day will happen as I have affirmed, because I am more than a conqueror. Let's get it popping. So, stock trade and investment day. Y'all know I take a step back. My man O takes over the host capabilities. So, without any further ado, my man O will take over the show, and get your pen, pad, and whatever you take notes on, get that ready, because he's going to drop something on y'all today that y'all going to want to actually listen to, take some notes on, and not just do that, but take action immediately. Oh, the floor is yours, my brother.
All right, thank you, good brother. Like I said, I'm always appreciative for you giving me an opportunity to speak, you know what I'm saying, and be in the host role, you know what I'm saying? So we're going to talk about inflation today. I know people have been talking about the gas prices and food prices and all these different things that are affecting their pocketbook strings. My little sister, I mean, she won't mind me putting this little bit of business out there, but she just moved out maybe about a year and a half ago, and she said her bill she was able to handle, and then all of a sudden she was like, I don't know what's going on. I feel like and I'm sitting there looking at her like, it's inflation. Inflation is eating up all of her extra money, right? So today we're going to talk about it. Hopefully we get a more understanding. Maybe by the end of this, for you business owners, maybe you'll see how to price things differently, because sometimes if you don't know, you keep the same prices and it starts withering away at your business. Maybe by the end of this, you'll see where you have the pinch at, what things you need to invest in. So hopefully I'll give you an understanding on this. I think we all need to know about it. It really does affect us. And it can make you feel like you're broke. Okay. And you weren't just a year ago. But as inflation keeps rising, it'll suck all the money out. So just to get started, we're gonna run through this. TK, my man, if you want to jump in, just let me know. Just hold me up. But I'm gonna run through, okay?
No problem, brother. You got it.
All right. So starting off, what is inflation? bear with me. Like I said, if I give you a definition and you don't quite understand it, just keep listening to this episode. What is inflation? Inflation is the decline of purchasing power of a given currency over time. Okay? A quantitative estimate of the rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of selected goods. Basically, prices of things go up over time. That's pretty much what it's saying. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. So your $5 from 20 years ago is not buying you the same thing that it is now, okay? Now, inflation, it aims to measure the overall impact of price change. So when you hear the inflation numbers, they're trying to keep it at a certain percentage, or when you hear the numbers where they say like we're at 8%, they're trying to bring it down to 3%. That's how they measure it, okay? So inflation aims to measure the overall impact of price changes for a diversified set of products and services, okay? And it allows for a single value representation of the increase in the price level of goods and services in an economy over a period of time, okay? As a currency loses its value, prices rise. That sounds weird, may sound weird to some people. But as the currency loses its value, the prices of things rise, okay? And it buys fewer goods. So like I just said, your $5 20 years ago buys less now than it did before, okay? This loss of purchasing power impacts the general cost of living. Like I was just saying about my little sister. She was handling her bills, and now it's like, I don't know what's going on. Well, this is what's happening to her. This loss of purchasing power impacts the general cost of living for the common public, which ultimately leads to a deceleration in the economic growth. Okay? The consensus view among economists is that sustained inflation occurs when a nation's money supply growth outpaces economic growth. Okay? So that means they're creating more money than actual businesses are creating economic growth. So the money supply is growing faster than the growth of a country's, of the overall like businesses of a country, if that makes any sense to you. Now, just for an example, I'll give you an example of inflation through a cup of coffee. In 1970, a cup of coffee cost 25 cents. 80, 45 cents. 1990, 75 cents. 2000, a dollar. 2010, $1.25, and 2019, $1.59. Now, if you grew up in my era in the 80s, we had penny candy. Penny candy is now like a nickel.
So let's just pause for a moment. So
yeah.
Number one, this is one reason why I don't drink coffee. Okay? That's number one. Number two, I don't really like coffee. And number three, all of y'all that drink coffee 7 days a week, take that money and add it up.
Come on.
And find out how much money you are spending on coffee due to inflation. I rest my case.
Okay, so now that we know what inflation is, let's talk about the causes of inflation, okay? The cause of inflation is an increase in the supply of the money. Like an increase in the money supply is the root of the inflation, okay? Though this can play out through different mechanisms in the economy, money supply can be increased by the monetary authorities either by printing the money, okay, and giving it away, more money to the individuals. We saw that happen during COVID, right? Or by legally devaluing the legal currency, okay? More of it happens by loaning new money into existence as reserve account credits through the banking system by purchasing government bonds from banks on the secondary market. So basically what all that is pretty much saying is the more money they print into the system, the more it devalues the currency. I'll just make it simple. So when they put money in and they say we got to print more money to fix this problem, or we gotta we gotta increase the budget to fix this problem, all of that is devaluing your dollar. Okay, so your dollar and if you're for it, if you're like, yeah, they need to print more money, they need to fix this, it's actually taking away your purchasing power. So by the end of this, hopefully we can figure some things out. Okay. In all such cases of money supply increase, which is them printing more money, the money loses its purchasing power. The mechanisms of how this drives inflation can be classified into three types. Now, if you have a pen and paper, you might want to take some notes here, because we'll see these three different types of inflation. We're all affected by it, and sometimes we don't even know it. Okay, the first type of inflation is called demand pull, right? So what demand pull is when demand for goods or services exceeds production capacity. So like for example, say there's an exclusive pair of sneakers and they only made 100 of them, but the demand is millions of people. You already know where this goes. The sneaker may have cost 200 when they first came out. Over time, the more demand, the more people want them. It's only 100 made. This $200 pair of sneakers can eventually go up to whatever price. It could be $2,000. That's a type of inflation, okay? Just to give you a definition, it's called demand pull effect. Demand pull inflation occurs when an increase in the supply of money and credit stimulates overall demand for goods and services in an economy to increase more rapidly than the economy's production capacity. This increases demand and leads to price rises. Now, some things do this on purpose. If you know about diamonds, diamonds aren't rare, but they take them all and release them little by little, which in turn pushes the price up of diamonds. But diamonds are actually like just regular rocks in certain parts of Africa. But what they do is they create this demand pull. If you're a business owner, you can create it too, but I won't get into that. The next one is called cost push. Okay, cost push is pretty much when production costs increase, the prices rise. So if it costs me more now to make you the cup of coffee, I now need to charge you more for you to drink it. Simple enough, right? Let me give you a definition of that, right? Cost push effect means cost push inflation is a result of the increase in prices working through the production process inputs. When additions to the supply of money and credit are channeled into a commodity or other asset markets, and especially when this is accompanied by a negative economic shock to the supply of key commodities, okay? Costs for all kinds of intermediate goods rise. So basically, again, these definitions, they get a little deep. The bottom line is this: if it costs me more for me to make it, I'm going to then turn that cost and turn it to you and make you pay more for it. So if I'm selling a car, it costs me more for me to make the car, I'm going to charge you more for the car. Speaking of cars, right? That last one I talked about with the demand pull. I don't know when we heard about. Remember, we heard about the chips shortage, and all the cars went up. Used cars. I just sold my electric vehicle for double the price that they were willing to offer me 2 years ago. So I sold it for twice the amount that they were offering me 2 years ago because of the demand pull. Okay, but I already talked about that. And finally, the third type of inflation is built-in inflation. So this when prices rise, wages have to rise too in order to maintain the cost of living. So prices of things go up during inflation. Well, in turn, hopefully your employer raises your wages, right? As prices go up. And the definition of that is built-in inflation is related to adaptive expectation. So basically, you better hope to be getting a raise that's outpacing inflation. The idea that people expect current inflation rates to continue in the future, right? As the prices of goods and services rise, Workers and others come to expect that they will continue to rise in the future at a similar rate and demand more cost or wages to maintain their standard of living. At the end of the day, sometimes this inflation, it stimulates spending if you keep it at a good percentage. You can't let it get out of hand and you can't let it get too low. So basically what that's saying is if they keep it at the right percentage and they keep increasing your wages over time, it'll stimulate and it'll keep you up with the standard of living. Okay. And it says their increased wages result in a higher cost of goods and services. So basically, over time, goods and services keep rising as inflation keeps inflating. And when you hear inflation, look at it as inflating a balloon. The more air they put into it, the more the balloon gets bigger. Right? Or I'll do it this way. Just think of Kool-Aid. If you scoop the Kool-Aid in, the more water you put in, the more it dilutes. If that makes any sense to you. Okay. And that's built in inflation. Okay. Any questions, good brother?
Nah, no questions yet. But let's take a little break here.
Okay.
And then come back for the second half. So I'm not gonna say hopefully. I know you guys are getting some knowledge out of this because I'm gonna tell you right now, I got a few nuggets myself as well. So let's take a little quick break. We'll come back, my man O, for the second half of our stock trade and investment talk today. Frame on Inc. podcast. Be right back. Are you looking for an apparel company that's positive, uplifting, and truly cares about you? Then look no further. Frame of Mind Inc., an apparel brand company, impresses on individuals to think positive thoughts, say positive things, and do positive deeds. Get positive apparel such as t-shirts, hoodies, and wristbands for children, teens, and adults in various colors and sizes. Customized services include logo and t-shirt design, screen printing, and embroidery for individuals, families, schools, profit, and nonprofit organizations. You can reach Frame of Mind Inc. at 302-689-3499 or visit their website at www.frameofmindinc.com. Frame of Mind Inc. Think it, speak it, achieve it. It's a frame of mind. All right, ladies and gentlemen, we are back with more stock trade and investment talk. My man O is talking about inflation today, and he's been dropping knowledge on us since the mic dropped. So let's keep it moving with more talk from my man O on inflation, gas prices, and everything inflation. Everything inflation.
All right. So just to recap, just to recap it, like I said, I want to make it simple because I'm spitting out all these definitions. What causes inflation is pretty much them printing more money or loaning more money into the system. Okay. Inflation pretty much devalues the currency. So your $10 from 2 years ago is not the same $10 that it is now. Okay. So even if you have a household budget, just with inflation alone, your budgets need to you need to keep track of things and what they're costing. Okay, so like your grocery bill over time, you might have spent $200, whatever, a time, and now for some reason for the same stuff it's $300. You're like, what happened? Okay, so just to get that little, now I'm gonna start to talk about the pros and the cons of inflation. Hopefully this helps because it's not always bad depending on which side of the road you're on. Okay, so inflation can be construed as either a good thing or a bad thing, depending upon which side you're on, okay? And how rapidly the changes occur. And let me just stop that there. What that means is if it gets out of hand, for example, I'll give an example of out of hand. In Germany, they call it the Weimar Republic, okay? In Germany, money, okay, a loaf of bread would start off the day at $1 and finish the day, or by the afternoon it was $2, and by that night it was $4. Sounds crazy, but it happened. Okay, that's rapidly getting out of hand. Like people, they said people had wheelbarrows full of money because they had to keep buying stuff because they knew that later, like literally in that same day or that same week, the price of bread was going up dramatically. That's what getting out of hand or rapidly changing in inflation causes. Okay. So let me keep going. Pros and cons. Okay. Depending on what side of the boat you're on, it could be a good thing or a bad thing. For example, individuals with tangible assets. A tangible asset is something you can grab, something you can hold, your house. Okay. It's tangible assets that are priced in currency like property or stock commodities may like to see some inflation as that raises the price of their assets. Okay. Which they can sell at a higher rate. Now, you've heard of people who bought their homes for 200,000, and if you just got rid of it, as of late, that house might have went for 500,000. You more than doubled. You, that's almost 100%, if not more, if you sold it for $500,000. Okay, um, but the buyers of these assets, okay, may not be happy with inflation. So the seller was happy with it, the buyer wasn't. Okay, as they will be required to shell out the money for inflation. Okay. On the other hand, people holding assets denominated in currency, such as cash or bonds, may also not like inflation, as it erodes the real value of their holdings. Okay. Investors that are looking to hedge, okay, or protect their portfolios from inflation should consider inflation hedge asset classes, such as gold, commodities, and real estate. So just to go back, what inflation does to the people who save money, and I'm not knocking saving, but what I'm saying is saving over time, you're pretty much it's like putting your money in a bucket or putting water in a bucket that over time is just dripping out. So you keep putting more water in the bucket and you're like, I don't understand why it's not overflowing. Well, when you save your money like with inflation like it slowly is withering away at the value of your money. Okay. So savers get kind of punished during times like these. Okay. All right. All right. All right. Hold on. So, what can you do? And last but not least, so that was the pros and the cons. And now, what could you do to hedge against inflation? So, this part's very, very important. Stocks are considered to be the best hedge against inflation, as the rise in stock prices is inclusive of effects of inflation, since additions to the money supply in virtually all modern economies occur as bank credit injections through the financial system. Much of the immediate effect on price happens in financial assets that are priced in currency, such as stocks. Okay, so just to give you a quick example in a real time thing, when COVID happened, 2020, March, the market crashed. To stop the market from, well, I wouldn't say they did it to stop the market from crashing, but what they did was because people had to no longer work, people were off their jobs, people were home. They did those PPP loans. They injected trillions of dollars into the system. What you end up seeing was the stock market pretty much stopped on a dime and went vertically in the air. And I think around April, it turned around and went the highest it's ever went. Okay, of all time. Okay, so the 2000 from April 2020 borderline to now, it's been falling now, but like maybe I'll say last or this January or last December, no, till November of last year, market has been soaring. So if you own stocks in that period, and when I say own them, you have the stocks. You're not doing options. You own the stock. Your account went to all-time highs. It should have if you're doing the right thing. Okay? And that's what happens when you own assets during the inflationary environment. Okay. Like I'm gonna read that last statement again. Much of the immediate effect on price happens in financial assets that are priced in currency, such as stocks. People also know of their home. If you sold your home within the last couple years, within the last year or two, your house went for a higher price, way higher price than it would have. And what makes real estate a great thing as an asset is that back when I was talking about that demand, the inflation that was called the demand pool, it's only but so much land in the world. So it's only but so much real estate. There's only but so much places you could put a home. So there's so many people that need a place to stay. People are going to always need a place to stay. So the demand for real estate is going to always exceed the production. You know, you ever hear the line of they're not making any more land, that's why you should buy it? Because once you have it, you have an asset that's going to always be there. It's probably going to always hold its value. Probably going to be worth a lot during inflationary environments such as now. But again, real estate is a great thing to have in this environment. Okay, so I'm just saying, and I'm gonna name this one last thing, and I'll be done. There's something called a treasury inflation protected security. Okay, it's low risk treasury security that is indexed to inflation, so you can invest in these things. Okay, it's indexed to inflation. So this is what happens: the principal amount invested is increased by the percentage of inflation. So if inflation is 3%, they increase your principal amount by that, 4, 5, 6, and so on. And what it is it's a treasury inflation protected security, which is an ETF. Now, if you go to older shows of mine that I've done, I've talked about ETFs, which means exchange traded funds. Okay. And there's other funds that can help to avoid dangers of inflation. Okay. But you just need a brokerage account to get one. And they're called TIPS for short. But overall, it's called Treasury Inflation Protected Securities. But the best thing, honestly, is real estate, stocks, commodities, and things like gold. That will protect you. And you wonder why, like, I used to wonder why, like, rich people would buy art. They buy so many different things. It's like, why are they buying these things that I didn't understand at the time? But these things hold value. Why do they buy diamonds? Why do they buy jewelry? Why do they buy gold? Why do they buy art? You got people now buying NFTs. I don't know how that's going to work out in the long run, but people buy things that are going to hold their value in times like this. So this is why the rich get richer. And the people that, don't have this information, like the savers of the world, the people who are the consumers of the world, the people that don't really that don't own anything, usually get hurt the most. So if you own assets, you own stocks, you own real estate, you own commodities, or you own gold or silver, you can't lose in times like these. Because if you need to liquidate, you can. You have something that you could sell. Okay. And when you really get into this, your assets can start making you money to pay on things that, to consume the things that you don't need. And with that, good brother, I conclude my my speech.
Well. You cannot say you didn't get a wealth of information today on inflation and a few other nuggets as well. So my man O dropping knowledge as usual. This is actually, to be honest, this is only our third stock and trade
this year.
So for this year, I know January we skipped. We did February, we did March. No, actually, I think we might have skipped March. It was our third or fourth, one or the other. And so we always appreciate bringing us knowledge and wisdom and understanding about the stock, trade, and investment markets. They all kind of work together. They all kind of have their own little names.
It's all hand in hand. Yep.
Listen, this is the bottom line. And you guys know that me and we are followers of the Messiah, Yahushua. You know him as Jesus. But let's be understanding from a natural physical standpoint. Money makes the world go round. Just that simple. And there's nothing wrong with having money. It's just when you start loving it more than anything else, that's where the problems come in. Because having it is an asset to what it can do for you and allow you to do for others. I'm going to say that again. It's an asset for what it can help you do and what you can do for others. So it's not just for you to be selfish with it. It's what you can do for others as well. So with that said, thanks for joining us today on the Frame of Mind Inc. podcast. Join us next week and we'll have another great show for you guys. And we'll be popping things out left and right as we enter into these late spring and summer months. So stay tuned, stay locked in. As the weather gets better outside, make sure you're making good and right decisions, as well as choices. Choices and decisions are one and the same, but they have the little slight differences. We did a podcast on that as well. Go back and check that out as well. Choices versus differences. Make good choices. Make better decisions in your life. Continue to think it, speak it, and achieve it. And until next time, we see you. I holla. Thank you for joining the Frame of Mind Inc. podcast. And as always, here at Frame of Mind Inc., think positive thoughts, say positive things, and do positive deeds. As our tagline says, think it, speak it, achieve it. See you next time.
It's a frame of mind. It's what you say and what you do.
Don't forget to check us out on the web at www.frameofmindinc.com, where you can browse our online apparel store, listen to some of our original music and production services, as well as view our videos and projects we've done for our clients and customers.